Welcome back. Now to our commodities update. All prices were steady today after falling in the previous session. See, Brent crude futures gained 18 cents to $82 a barrel, while WTI futures rose 17 cents, about $81.51. Well, we have Bolanle Agbaje now join us for an update on commodities market. Great to have you, Bolanle. Good morning.
Good morning. Thanks for having me.
Yeah, so we've seen oil market, it's been quite strong, for some days now, but I guess we're having a pullback today?
So oil prices had increased to about $85 per barrel as at yesterday, but it has dropped to $82 per barrel as at this morning, and that's just because the U.S. has mentioned that they're about to release their strategic reserve to kind of increase supply in the markets. They've said multiple times and mentioned to Saudi Arabia to come in and increase supply, and OPEC Plus have decided not to at this point. I think they're still they're hopeful and optimistic about the oil market and still trying to profit from this. Like I mentioned on Tuesday, the Saudi in particular had increased domestic price of oil. So some of these oil producers are waiting to see how the markets take it, and also trying to take advantage of the increase in demand during the winter period as well.
So in my mind, when this happens, I start to think, is the bull run over? But somehow the market tends to surprise me.
Yes,
what are you expecting?
It's still far from over. We do expect that, in the next few weeks, oil prices would still trade between $82 to $85 per barrel. Some analysts are expecting about $100 per barrel. I think that's too optimistic. But in the short term, that's the trajectory. Although we're waiting to see what happens, depending on how strong the winter is. If the storms are, huge, then we do expect, really bullish returns when it comes to oil prices.
Okay, and it's been COP26 this week. It's ending tomorrow. Can we expect any impact, on the oil market from when it ends tomorrow?
Not necessarily. Oil prices are still, driven by the fundamentals in the market. Anything that has to do with demand and supply. We don't expect any pullback to this, except there's a, significant effect on oil price on the production side or on the demand side. Like oil prices actually took a downturn today, just because we're seeing fundamentals or points towards, increasing supply by the U.S. Government.
All right, and still looking at the U.S., you see pressure on America's central bank to raise interest rates as the inflation has surged to a 30-year high. What's stoking this?
Yes. Well, I think they did expect that, prices would keep increasing from the pandemic, era, and obviously the post-pandemic situation that we're currently facing. We've seen prices increase in the U.S. when it comes to groceries, house rent, and other aspects of the economy. So mainly consumer goods. We've obviously seen the trend of increasing commodity prices, across all board. But I think the Fed still believe that these increases are transitory, so they're temporary in actual sense. So they do believe that, things would more or less adjust, or the market will more or less adjust itself, in the next coming months. They did mention that, they're not looking at increasing interest rates until about June 2022. But for now, they're working on, reducing the bond sales, monthly bond sales that they have been doing, which is more or less like quantitative easing anyways. But currently, they're not so worried about the increases in inflation currently in the U.S., but they're watching to see how the market behaves.
And some believe this is because of the record money printing by the Fed last year when COVID started.
Yeah, most of these countries are more or less worried about growth and trying to, preserve growth numbers at the moment. They're trying to, look at how individuals are adapting to this, COVID pre-pandemic and post-pandemic, situation. So they're trying to monitor growth as well as, inflation at the same time. But the only way to, reduce inflation is by increasing interest rates, which would hinder growth. So it's it's more or less a dilemma for the most
The
of the
devil and
central
the
banks.
deep blue sea, basically, at this point.
Yes.
How will this impact emerging markets?
So for emerging markets, once you have, increases in interest rates in the US is more or less bad for us, especially emerging economies that haven't positioned themselves properly. So Nigeria would be an example of that. We're already struggling with our dollar supply. So when you have a situation where interest rates is increasing, it threatens, investor confidence and, more or less our dollar supply. But at the same time, you also have that indirect relationship with oil prices. When you have increases in interest rates in the US, it's more or less would appreciate the US dollar, and this has an inverse relationship with oil prices. So when you have an appreciation of the US dollar, you see a fall in oil prices, which is also bad for Nigeria. So those are the issues when it comes to higher interest rates. But we're still calm at the moment because the Fed has reassured the economies that the increases in interest rates are not going to be done until about June 2020 next year.
Anyway, we need the
2022
we need the assurance,
yes.
basically. Well, let's look at currency. Now we see Naira has gained about 1.25% in the parallel market.
Yes.
Is this a trend we can expect to continue, or?
It depends on a lot of factors. The main factor would be, oil prices. As oil prices are increasing at the moment, the central bank is, confident and comfortable to increase dollar supply. So we're seeing more dollar supply in the market. We'll definitely see appreciation of, because that's the the direction of the market, and that's how the market should react to that move by the central bank. So I think that's the only driver at this point when it comes to the appreciation of the naira.
And last time we spoke, we saw that our external buffer was still was trending down at that point.
Yes.
How's it looking now?
It's about $41 billion, $41.03 billion at the moment. It's the drop down is not too much at this point, but the CBN is definitely not going to increase dollar supply to ridiculous amounts just to appreciate the naira. They're just monitoring it and pushing a certain amount of dollars into the market gradually.
And another issue I see here, farmers owing the CBN about 463 billion naira.
Yes,
Why can't they pay? Why the defaults at this point?
There's huge insecurity in the north. And that has, prevented farmers to, more or less do their job when it comes to increasing production of some of these agricultural products. Some farmers are scared to plant. Some farmers are also scared to, even go into their farms and get, the job done. So it's not surprising. I also saw that you reported this morning about Katsina, insecurity in Katsina as well. This has been trending for the past few months. In fact, for the past how many years? And it seems like the government is trying its best to monitor and reduce insecurity, but I think the high level of poverty within the economy is what keeps driving the insecurity levels. A lot of these people are poor and they're still struggling, and the only way they can respond to this is by being increasing the insecurity levels in those parts of the country. So that has prevented them. It's part of the Anchors Borrowers Program by the CBN to increase loans, but I'm sure the central bank also understands that these are the problems that some of these farmers are facing, and I'm sure working tirelessly to make sure that they can actually have a safe environment to plant most of their agricultural products.
A backlash on the farmers with this.
Well, it's the reality at this moment, but we do hope that so many interventions by the government would actually solve this particular problem.
Right. Let's look at some agricultural commodities. There we see Africa's coffee exports rose about 2.2%.
2.2%, yes. Coffee exports actually increased in Tanzania, Uganda, some of these African countries. It actually reduced in Ivory Coast, but all in all, is the good news is that Africa has increased its coffee exports by about 2.2%. Nigeria is also a player, but we're not positioning ourselves in the right way. I think we only produce about 1,000 tons, which is not so great, but it's something something to look at is why we reported it, to show that, other African countries are actually, doing well when it comes to increasing.
What's stopping Nigeria from actually,
like I mentioned, the
stepping up?
insecurity, they also, like the previous lady that was on, also mentioned the fact that, the value chain, we're not taking advantage
Is our
of.
coffee getting rejected? She also talked about,
Yes,
some
so
of the
it's
commodities.
possible because, we've not been able to meet the standards, international standards, which is a big problem. And, once you're not able to meet the international standards, you're definitely not going to get buyers. So what happens to, most of the products that are being produced? They more or less go to waste because this is not being utilized properly. So those are, some of the issues that we have. Then infrastructural issues as well. We don't have, machineries. We're not taking advantage of the technology advancements that could be, utilized in those farms and all of that. So those are some of the issues that, plague the agricultural sector in Nigeria.
Right. What's happening in the domestic commodities market at this point?
So one news that has recently popped up is the Central Bank of Nigeria increasing, buying seedlings in Plateau State to increase the production of wheat, which is great. Wheat is the second largest contributor to our import bill. So if there's something, the CBN is doing about this, it's big news. Although the seedlings are being gotten from Mexico, and the only drawdown or the only bad side to this is if the Nigerian consumer is actually going to when it comes to taste and preferences, if they're actually going to accept this variety of wheat. But in essence, what this happens is once you increase the production of wheat, for example, we should see prices of the final products, which is bread and pastries, come down. The price of bread had doubled or even almost tripled in the past few years, and it's a major staple in Nigeria. So it's a good venture by the central bank to buy.
That means we can expect cheaper bread?
We can expect cheaper bread if everything is done properly. Yes.
All right. What's your outlook for agricultural commodities?
It's not so great. We do expect agriculture prices of most agricultural commodities to increase. We have the December period coming in. Increases in demand and also the exchange rate as well. Even though we're seeing slight appreciations, it's not enough to bring prices down. So it's not so great for agricultural products.
And we still have cooking gas prices
still high,
rising. It's going to be an interesting holiday.
Yeah, very interesting. Though we're seeing most consumers move towards firewood and charcoal, which is not great health-wise and for the environment at the moment.
Exactly. COP26 will not be happy with that.
Yes, they wouldn't.
All right, Bolale Agbaje, financial analyst at Financial Derivatives Company. Thank you so much for coming on the program.
Thank you so much for having me.
All right, we'll take a moment now. Business Morning returns in a moment. Just stay with us.